I'm your host. I'm Alejandro Fernandez, and I'm very, very happy to be the host of this webinar for two reasons. First, because I'm going to introduce you to two very effective speakers, and you're gonna actually talk about this afterwards. And the second thing is that in many webinars, you go and you get, a couple of pieces of information, and that's amazing if you get that. In this webinar, I can guarantee you that immediately you're going to start receiving information that is going to be useful to you. So, so this is very, very good for everybody, especially in the times we're living. So let me introduce you to the speakers. Gabriel Duttari has more than 20 years of experience in the businesses all over Latin America, all over the Latin American region. He has focused both in operations and also in the financial area, especially in the cash management. And you're gonna find that very important for this seminar. Cash is king, but as I say, mindset is queen, and the combination of cash management with the adequate mindset is a perfect combination, and you're gonna see it today in this seminar. Gabriel holds an MBA from Louisville, University of Louisville, and he has a master's degree in environmental engineering from the University of Cincinnati. Now let me introduce you to Joey Levy. Joey Levy has more than 13 years as a financial consultant. He has been key to the growth of more than 100 families in the region. He's a Gator. He has a bachelor's from University of Florida. It's a bachelor in finance and economics from the University of Florida. And he holds an MBA from University of North Carolina. And I would like to add something about Joey. Joey loves getting knowledge. This is a guy who's really into searching for the latest. But I know many people who are into this too, but they look for knowledge for the sake of knowledge. The amazing thing about Joey is that he actually searched for knowledge to help people. And that is something that I find completely unusual. So without further ado, Joey, Gabriel, take it away.
Thank you, Alejandro. Well, first and foremost, I want to thank everybody. I want to thank Executive Forums for this expert insight. I want to thank Alejandro for those kind words. Alejandro, they mean a lot to me. And I want to thank all of you participating with us today. We're going to be talking about profitability, which is super important at this time. Gabriel, give me the, let me request remote control again. Okay, hold on one second. Okay, great. So before we start, hold on, let me just take a step back. Take it one step back, Gabriel, if you could, and then I'll take it from there. Okay, so before we start, to get the most out of your webinar, I'm gonna ask everybody, please no multitasking, put your phone in airplane mode. I know what it's like. Can you go back, Gabriel? I don't know why it's happening, but I know what it's like to be on the other side of this Zoom, where you've got Zoom here, and then over here you've got like an email or some documents you're working on. Like, that doesn't work. Your brain cannot do two things at one time. And it's really important to focus on this. This is a super important issue for your business, for your family, for your life. So please focus and turn off all that stuff. Also, it's really important that you write down what you want to get out of this event. There's something called cognitive priming, which means that if you tell your brain you're looking for something, so if you actually write down on the top of your, if you're taking notes, raise your hand. What you want to do is write down on the top of your notebook or wherever you're writing, what I want to get out of this is, the most important thing I want out of this is, and if you write that down during the entire presentation, your brain will start to look for that. So It's amazing how this works. Also, take notes and jot down any questions for later. The questions are anonymous. No one's going to see the questions, but it's really important to take notes. And here's why. If all you guys do is listen to us and you do nothing else, in 1 month, you'll only retain 10% of what we've spoken about today. However, if you listen to us and you take notes, that percentage shoots up to about 50%, right? And if you listen, take notes, and when I say raise your hand, or at the end you ask questions and you engage, that percentage goes up to 90%. So patient is really, so participate and get your question. We'll be glad to answer. And finally, be curious and enjoy this time. There's something called brain plasticity, which is the ability of the brain to create new neural connections so that you can literally change your mindset. But in order to do that, you have to come at the activity in a state of curiosity and enjoying what you're doing. So enjoy this time. This is for you. Be curious, open yourself up, and I promise you, you will see the benefits. Okay? Hold on a second. Okay, so a little history. Before we start, we got to understand where we came from. Right now, I'm going to be talking about the Panamanian economy, okay? But you can apply it to, your economy or the world. In our case, in particular in Panama, prior to all of this event happening, our local economy had been slow for several years. Our government changed and the private sector was excited. Slowly but surely, our economy was starting to improve. And I could say that, I talk to a lot of people. I have 100 families that help organize their finances and affairs. I'd say we had a mindset of hope and opportunity. We could see the light at the end of the tunnel. And then out of nowhere comes COVID, and it catches everybody off guard. Nobody was prepared for this one. And the economy takes a nosedive, and for many, many people, their cash flow from one day to the next just vanishes, right? This causes people to be scared and stressed because their companies were not prepared for this, which is a completely normal and understandable reaction. But our first message is this should not and cannot destroy all the hard work you and your team have done. Once again, this should not and will not destroy all the hard work you and your team have done throughout the years, okay? So let me just tell you a little bit about me real fast. As Alejandro said, I help families organize their financial affairs and their personal affairs. And a few years ago, I was uncomfortable with the finances of my company. And that was interesting because one day I sat back and I said, wow, it's kind of weird. Like on the personal side, everything's in order. But on my business, I don't feel the same level of tranquility. I just don't feel as comfortable. What's going on? And as I got into it, I realized that I didn't have a process for managing the finances of my company. I had a process for managing my finances because what I did was I got on the process that I made for my clients. So 100 families, there's a process I created for them. And if I jump on that process, I'll get the same result, which is everything's planned out. I feel, super comfortable and with a lot of tranquility and everything. But on my company, I realized I didn't have that. So I started looking for a methodology, a way to manage my business that would be better. And I found one that has transformed over 150,000 businesses worldwide. I've been using it for 3 years, and I started to present this and share it with my customers. And the reception was just crazy. People were like, Joey, I need that yesterday. That's amazing. So I actually got on a plane, went to New York, spoke to the author of the book that you'll see in a little bit, and brought it to Panama, and then realized I can't handle this all myself. I was talking to Gabriel, who's a friend of mine, who I've known for years, at dinner, and I explained it to him. He said, hey, Joey, wow, we got to do this, right? And another message I want to say is this system and methodology that we're going to show is perfect for what we're going through right now. It's actually perfect for the exact situation. So now I'll hand it over to Gabriel for a second, and then I'll come back on.
Thanks, Joey, and good morning or good evening to everybody here. And yes, just a couple of lines about myself. For the last 20 years, as Alejandro mentioned, I've been collaborating with different types of companies in and out of Panama. I spent like 8 years with ExxonMobil, the petroleum company. I also had the opportunity to develop my own company here in Panama. It's called Panama Waste Management. This is the biggest private waste management company in the country. I remember I started with 40 employees, and then I handed, and 11 years later, I handed this company with 500 employees to a Mexican corporation who's running it right now. So it allowed me to, learn a little bit about operations, finances in the region. And then for the last 3 years, I've been helping different economic groups in Panama, improve their operations or their corporate finances by participating in different positions as CAO and also in boards of directors. As we mentioned, using this methodology that we're going to be talking about today, what has helped me personally is, in addition to complement or improve my knowledge in corporate finances, basically what I always say is that it has helped me take better decisions in terms of all the different situations we are dealing with. In the last couple of years, along with Joey, we created this company. What we're doing is we are implementing the method and helping these companies go ahead, especially in situations like the ones even worse than the ones we're seeing now with COVID-19. So again, this is a perfect opportunity to implement this type of methods in your companies. So we'll be looking at this later. And thank you again for the opportunity. Back to you, Joey.
Thanks, Gabriel. So let me see if I can get this to go forward. Here we go. Okay, so we have a plan for prosperity in this new world we find ourselves. It's a 3-step plan. Number 1, you have to redesign. Can you go back? You have to redesign your client product mix. Number 2, you have to restructure your business to be profitable with that new client products mix. And number 3, you have to grow and never again have to deal with a situation like this because you have a framework and a methodology for how to handle these situations. Okay? Really, really important. So, it's a little slow. Okay. This is really important, guys. The number 1 thing that will determine your destiny right now is your mindset, your emotional and mental state of mind. There are 3 mindsets that we are seeing. I have talked to literally hundreds, if not, we've done webinars for thousands of people. I've received emails. There are 3 predominant mindsets we're seeing. Number 1 is the mindset of fear and panic. If you are in a mindset of fear and panic, your business will eventually close. And the reason is when you are in fear and panic mode, you do not make good decisions. That is not a good mindset to take decisions from. The second one, which may even be worse or more dangerous, is the mindset of status quo or comfort zone where you think, where you think, hey, you know what? I get this is happening. It's a big deal, but maybe we're not going to be affected so much. Like you get it, but you're kind of in denial about how serious this is. And if you do that, all you will do over the coming years is subsist and survive. Subsisting and surviving is a couple of years or a lot of years of stress, of problems, of arguments. It affects your health. I mean, this is not the path you want to go down. And the mindset that we believe is the right mindset is the mindset of, I'm going to redesign, I'm going to restructure, I'm going to grow my business. This is an opportunity for me to grow and transform my business. So it's really important to understand that you determine this with your mindset. Now, Gabriel, I think there's, okay, so yeah, so we're good. You're good. Okay. So one thing I want to talk about is before we go forward, you have to decide if you're interested or committed to adopting this mindset. So what's the difference? And this is one of the most important things I've learned in my entire life, this distinction, and it can be applied to all areas of your life. When you're interested in doing something, you do it when it's convenient. You do it when it's easy. You always have a reason why you can't do it and an excuse. And you let your past determine your actions. Oh, because someone did something to me 15 years ago, I'm still the victim today. You tell yourself, you know the word rationalize? Let's break that into 2 words, rational lies. You tell yourself rational lies about why you don't do what you know you're supposed to do, and you believe that bullshit. And your favorite word is I should, but you never do, right? Now, when you're committed to doing something, you do whatever it takes. You think of your why, your purpose. Whenever there's something important in your life, there's always a really big why and a purpose. And in spite of fear and discomfort, which everyone feels, you take action, zero excuses. My past doesn't matter. I must do this. If you want to know the difference between successful people, and I'm not just talking about business, in any area of life, and those are successful and who those aren't, this is the difference. Are you interested or committed? And I want to show you guys that you guys have probably done this already, you just haven't thought of it this way, right? So let's do something. I want everybody right now to think of something that was super important for you that you wanted to accomplish. You had to work really, really hard and you made it happen, okay? Think of something that was really important for you. It mattered a lot to you. You busted your ass to do it. You worked hard and you did it. I will bet you $1,000 you were committed. Now let's do it the other way. Think of an area of your life where there's something that's really important to you, but you haven't done it. The gap still exists. You haven't fixed the problem. It's out there and you know it's out there and you haven't done it. Everybody's got one of those in their life. You want to know why? It's because you're interested. You're not committed. That is the simple truth. So for you to be able to listen to us and to be prosper in the coming years, you have to be committed to adopting this mindset, because this is the mindset that's required right now. So what can derail you? What can screw you up? And it's ironically the voice in your head. We all have a monkey mind, the primitive mind. We all have a mind that comes in and puts doubts. And if you have this mindset, you know, if you're over here in the panic zone, in the fear zone, everything we say to you, what's going to be going on in the background is, oh, what these guys are saying will never work. I can't do that. I can't be that simple. That's just a voice in your head that you have to not listen to because it's not real, but you're acting out of fear. And if you're in the status quo, or what I call comfort zone, oh, our company hasn't been so affected. What they're saying really doesn't apply to me. It applies to the other one. Hey, be careful with that. Right now, you have to look at this as an opportunity. We can grow, we can adapt. Let's take advantage. No one wanted this situation, but now that it's here, let's take advantage, transform, and grow our business. And that is what you have to be thinking. So step number one is redesign your client product mix for the new world. Now, I want to say something about business. This is really interesting. So everyone talks about the new world, and I agree the world is different, but there's one thing that's not different, will never be different. It's always been the same since the beginning of time, and it will be to the end of time. Successful businesses only do two things. They solve problems and they add value to their customers' lives. That's it. Now, they do it in a million different ways, right? Apple computer, Disney, your computer, your company, my company, the Panama Canal, Copa Airlines, which is our regional, our Panama. I don't care who you are. If you're only doing two things, solving problems, adding value to your lives, and that never change. So what we want to produce you is a simple frame for redesigning your client product mix so that you can continue to solve problems and add value to people's lives. Okay? So this is a very simple framework. You have clients, actual and new clients, products and assets, actual and new. And this is in order of preference, right? In order of importance. So the number one thing you want to do when a crisis hits is you want to say, my actual clients with my actual products, how can I add value to our current customers at this time? This is my base. This is the people who bring me revenue right now. And the first focus is them. They are my customers right now. This comes from calling your customers, and I'm going to give you tips on how to do that, but this is speaking to your customers, okay? The second thing you want to do is say, what new products and services do my current customers need at this time? Okay? Why is this second? Because it's always easier to sell something to someone who's already your customer. So if I come up with a new product and they already know me, like me, trust me, we've already got ways of, payment systems set up. It's a lot easier to sell a new product to a current customer. Okay? Number 3, how do we modify our current product and services to attract new customers? This actually comes with brainstorming with your team, strategic partners. This could be shareholders, board of directors members, suppliers, to find out how we can modify what we have to break into new markets. And the last one, which you'll notice has no number, and it's like in an orange kind of red, that was supposed to mean like warning, do not do this, is what new products and services can we offer to attract new customers? This is where you're going to markets you don't know, people you don't understand, with stuff you've never sold before, you don't know the product, and you are acting out of fear and desperation. So do not do this. And I'm going to give you examples of this now. So let's talk about number 1. How do we add more value to our customers? When the pandemic hits, the first thing I do is I call all my customers. How are you doing? I start talking with them, and I hear a level of fear and stress that I've never heard. So I came out with a webinar called How to Manage Fear and Control Your Mindset to Prosper in Uncertain Times. And I told my customers, this is for you. This is for your families. This is for your colleagues and partners, and this is for your employees. And I'll just give you one example. I got a customer here who runs a very big distributor of medical equipment. And I did a seminar, a webinar just for his company, 150 employees. People are freaking out. They were totally scared. And everything is, really, really tough, right? And I come in and I give this seminar to them. And the guy calls me up and he says, Joey, I can't tell you what you've just done. My employees have a different mindset now. What you've done is worth so much to me. That's out of control value for that guy. So number 2, what new products and services do our current customers need? Now I'm using a local example. This is a pizza place here. If you're ever in Panama, you should try it out. It's called Barrio Pizza. So Barrio Pizza has an issue. People are scared to order from restaurants because of the virus. So what do? They came out with a new product, which was a combo do-it-yourself 4-pack. And what is this? They send you the pizza dough, they send you the sauce, the cheese, and the toppings in a box. You make your own pizza, and then you cook it. Obviously, if I cook it, I kill whatever virus this is. So what they did was they came out with a new product for their existing customer base. And we have a platform here that would be like Uber Eats or, whatever it is in the States. And it's called Apetito 24. And I'm friends with one of the guys who founded this. This is one of the #1 selling products on that whole platform in this country. So this is a great example of how you can come out with a new product to existing customers and capitalize. Number 3, how do we modify our current products and services for new customers? And look what Uber did. Uber launches Uber Connect and Direct. Uber Connect is packages. Hey, Gabriel, I got to send you this document, or I got to send you this box, or whatever it is. And an Uber will come and get it and take it over to Gabriel. But Uber Direct is actually with retail stores. So I buy something from someone with a retail store, a small little retail store, an Uber will go pick it up and bring it to my house. So what did Uber do? They modified their current products and services, and now they have retail customers as customers. Very, very smart on the part of Uber. So what we want to do in this environment right now is we want to connect with our customers. And this is really, really important. And the way that you connect with someone, and this is a formula you can use in every area of your life, is empathy plus authority is equal to connection. Empathy plus authority is equal to connection. What is empathy? Empathy is, I understand you. I know how you feel. In order for you to connect with someone, they have to feel like you understand them. But not only that, you have to show authority. Authority is, I am a person who can help you through this situation. Okay? It's not authority like I'm higher than you. It's, I'm a person who has the skills to help you through this situation. Okay? Now, it's really important to have both. Because if I'm all empathy and zero authority, then I'm just like a good friend who listens to you but can't help. If I'm zero empathy and all authority, that can come off kind of not good, right? That kinds of like unfeeling and all that kind of stuff. So it's a combination of empathy and authority. So I put a couple of examples of things you can say when you physically call your customers and say, hey, I know how it feels to be stressed and worried. I know how it feels to be scared. That creates an empathetic connection. Nobody should have to feel X, right? Or like you, we're also frustrated, scared, stressed, whatever it is. That causes them to connect with you. And then authority is showing them how you're helping customers with similar problems. I've been able to help 50 people like you. Or what are you doing right now? Hey, I understand how you feel. I know what it feels, whatever, blah, blah, blah. And let me show you what we're doing. We're doing 1, 2, 3, 4, 5. That combination is really powerful. I will just give you one tip on authority. Be careful that you don't come off as arrogant or that you're minimizing the situation. Authority has to be done very well, so don't cross over that line. But empathy and authority is connection. Once you connect with someone, what you want to do, or let's say it this way, what you don't want to do, which is what almost everyone is doing, is these two things, which is ask them to pay you what they owe you or try to sell them something. That is not the model. If you connect with someone, do not ask them for money by asking them to pay you or by trying to sell them something. What you want to do is you want to ask them what their problems, challenges, and obstacles are. You want to ask them, what are they concerned about? What would give them confidence and peace of mind? Why? Because we said at the beginning, the way you're successful is by solving problems and adding value. And the way you solve problems and add value is by listening, right? So if you call a customer and you connect with them and you ask them these questions, they will, number one, be grateful because no one's making that phone call. And number two, they will open up with you. I did this with a customer and I said, I want you to call your top 5 customers and do this little framework. The guy called me the next day. He goes, Joey, I'm just going to tell you one, because I was on the phone for like 8 hours yesterday. But I had one phone call with my biggest customer, a guy in Puerto Rico. I called him up and I said, hey, man, I understand how you feel, this, that, and the other. He connected with the guy and he said, hey, what are your problems? The first thing that happened, he said, Joey, my customer said to me, first, you're the only person who's called me to ask me how I am. And then the guy opened up and literally they spoke for like 2 hours. And he said, Joey, out of that one phone call, I got 5 ideas for new products and services. The seeds of your new products and services are in these conversations. Remember, you're trying to solve problems and add value. Your customers will tell you, okay? Finally, one thing, when you launch, please do not do this. This is I did this little thing because I didn't want to show who the person was. It's a doctor here in Panama that I'm friends with that was relaunching or opening his clinic, his medical clinic. So here's what he wrote, right? We're back. Just to let you know, starting tomorrow, we're reopening our clinic. We've implemented all the recommended safety features necessary to continue to serve you and your family. Now, this little advertisement that came out on Instagram and Facebook and all over the place did not work. And here's why it didn't work. Because there's zero empathy and zero authority. There is no empathy. We're back. Hey, we're opening tomorrow. Hey, dude, everybody is scared right now. What you need to say is, hey, we understand scared to go to the doctor during a pandemic. Say it. Everybody feels it. So now the person goes, wow, this guy gets it. And here's what we're doing. Every patient that comes in, we only schedule one patient an hour so they don't run into each other in the waiting room. Every time you go to see the doctor, we clean the thing with a wipey, whatever, right? Contactless pay, whatever it is to show that you're actually doing with authority. Now, these people suffer from something called the curse of knowledge. When he writes, we've implemented all of the recommended safety features, I don't know what those are. He's a doctor. He has the curse of knowledge. He knows so much, he expects everyone else to know what he knows, right? So be careful. Sometimes we as executives and as business owners, we know so much about something and it's so natural to us. We think everybody knows, right? So again, it would have been much better for him to explain. So again, without empathy and authority, there's no connection and this doesn't work. Okay, Gabriel, let me just put myself on,
Right. Thank you, Joey. Let me continue here with let's go into the financial part of our presentation with our step 2 and restructure your business by focusing on profitability first. Okay. The methodology that we've been talking to you about, or we're going to be talking to you about today, it's called Profit First, and it's based, as Joey mentioned, On Mike McCallowitz's Profit First book, it was written around 6 to 8 years ago. And let's just start with some statistical facts. Did you know that 99% of businesses are started by specialists or technicians that are not experts in financial administration or in corporate finances? For example, an engineer, a lawyer, an architect, a chef, an artist, people who are very good at what they do, but are not really knowledgeable in terms of finances. So what usually happens is these people do not get help in terms of administration of their businesses, and their businesses grow and they try to do whatever they can or the best they can to keep the business going. So what happens then is that 96% of these businesses won't make it to 10 years. That's because the owners who are not experts in financial administration or financial corporate finances, they do not know how to turn their accounting profits into cash. So they will run into cash flow problems, and they will end up within this statistics that will make them run into problems. So what happens, or what does Profit First do? Profit First will allow these business owners to run their businesses like if they had a manager working with them. And in addition to that, it will help them make better decisions because it will show them what to do under different economic situations. For example, what we're seeing now, you run into a very quick changing situation, and the methodology will show you what are the changes that you need to do in order to keep your business running correctly. Now, with what I've just said, many people here that are here with us would think, well, this is not something for me. This is for small companies. This is for startups. This is for people who are actually beginning their businesses. But that's not real, because we, based on our experience, we have seen that Profit First also works with companies, with bigger companies that do have CFOs or general administrative for financial managers. For example, it can take all the information, all the financial information that a bigger company runs with or has, and translate that information into a language that all the owners and managers will understand. For example, I was with a one of the biggest law firms here in Panama a couple months ago, and the CFO tells me, "Hey, Gabriel, the reality, the truth is that when I'm explaining on the board to the board of directors all the results with the P&L reports, this balance sheets, cash flow reports. When I'm doing that, I know that half of the people who's in this room do not understand what I'm saying. So what Profit First can do is take that, translate all those very nice reports into a language that everybody can understand. In addition to that, we have seen that we understand that there are corporations, bigger corporations that run with corporate financial departments, but most of them do run their businesses like if they were small companies. The divisions are run by people who run them like if they were small companies. So Profit First can also help to those division managers, make them focus on cash flow and profits, and make sure that they are adding to the bottom line of the company. And finally, we have also seen that there are also companies that are on a different growth level. They are implementing more advanced growth strategies, and Profit First will not be the key decision scheme or key decision maker for that type of companies. But what it will do is allow the owners and the managers to focus on profit and cash flow, while the CFO team focus on the advanced strategies in order to grow. So having said that, let me take you back to the formula that we all use to run our businesses today. Revenue minus expenses equals profit. We have all been taught to run our businesses this way. But in reality, what happens is that this formula does not work. Yeah, it doesn't work. Let me give you an example on why I say this. If at the end of the year, I get my accountant comes to me and tells me, "Hey, Gabriel, congratulations. I just finished your all your numbers and all your tax declarations, depending on your country, how you call it. And now you have won $150,000 of profit this year. So I take that report and I say, well, this is great news, Mr. Accountant. And the first thing I do is I go back to my online banking, I go back to my accounts, and I, most of the time, not to say always, I will never see that money in my accounts. I'm sure that many people here today have experienced this one way or the other when you're running a business. You get your reports from your financial department, and whenever you go to your bank, you will never see that money there. And we all understand that that's happening. So that basically happens. That basically happens because we have two situations running right now or happening on our day-to-day when we run our businesses. First one is called Parkinson's law, and the second one is the way we make our decisions when we use our online banking. Let me go into that in detail. Reason number one, Parkinson's law. What happens with this theorem is that it says that human behavior works this way. If you have a resource, you will always use all of it. And whenever that resource when you have less of that resource, your behavior will change. You will become prudent, you will start being more creative, you will be more careful, you will make sure you will use until the last drop of that resource until it finishes. So the best ways that I can explain this is with a toothpaste tube, a brand new toothpaste tube. Whenever you open this, the first thing you do is like you use it the way I'm showing this in this picture here. You take your toothbrush and you put all the way through your toothpaste. But what happens is as time goes by and your resource, your toothpaste starts being less, you become more prudent, you become more careful, you use less of it, and then you end up using just a little bit on the toothbrush. But you brush your teeth and you feel that you accomplish your goal. And not only that, you start becoming more creative. You start, rolling it, pushing it, cutting it into the middle, trying to, scrape your toothbrush inside of it. Anything you can do to take out of that toothpaste the last drop. So if I take that same analogy and I use it here we go back to the traditional formula of our businesses. Revenue minus expenses equals profit. Okay, if I use the same analogy in our businesses, the toothpaste is your money. So whenever you open your account and you see that you have money in there, you will use it all. Whatever you feel like using it, but you will use it all because you have it, and since you have it, you will spend it. What Profits First does is it takes the formula and just rearranges it or changes it to revenue minus profit equals expenses. Exactly like it says. You take whatever the percentage or whatever the amount of profit you decide for your company that it will be, you take it out first, put it into another account, somewhere else you're not going to see it, and then your business needs to adjust to whatever you have left. You need to adjust your business. So whenever you do this, based on this reason number one, you're going to start working better because you're going to be more prudent and more creative to use your resources. The second reason that we never see our money into our bank account is exactly that. It's the way we're handling our bank accounts. Okay? The first thing is that most of us do not take our daily decisions looking at our P&L or any of our financial reports. We do not run around with those reports. So what we do is we go into the bank. If we need to purchase something, pay something, or do whatever decision we have, we go into the bank. If we have money, we go ahead and do it. And if we don't have the money, then we have to be creative and we have to do something else because we have to keep going. So since you get in a regular business, all the income of that business will go into the same account, into the same bucket. Most of the time, you will not be able to understand or know if you're using more or less of your money into operations or into any other requirement or any other duty that you have in your business. Profit First, the first thing it does is just allows you to understand and to identify what is the real revenue of your business. It shows you what amount of money from whatever money comes into your business actually belongs to you. And after it does that, it will help you identify or give a reason or give a duty to each one of those dollars that belong to you by showing you how to separate them into different accounts with different purposes. So let me explain a little bit more on this with an example. Imagine yourselves that you're a construction company, and we win a bid of $4 million. Okay, total revenue for that company will be, in this case, $4 million. But let's look into the reality of those $4 million. Basically, this company needs to go ahead and buy materials, metal, wood, concrete, hire some people around. They need to do this in order to deliver their product. So that's actually your materials and your subcontractors. That's part of your cost of product sold. That's what you need to invest first in order to deliver your product. So if we go to this chart, that part will be here. Let's imagine that's 2 million out of the 4 million. So the real revenue of this company is not 4 million. It's actually $2 million. That's the money that belongs to the company. So once we identify that, we go ahead and we separate that money into 4 specific basic accounts. First one is profit. We have to define what our percentage of profit is, and that depends on the industry, the country. I mean, it depends on different situations that the methodology shows you how to do it. But in this, I just put some percentages here as an example. You take that profit, define it, and put it away into another account. The second account, or the second separation that you have to do is the one for taxes. Okay, financially or fiscally healthy companies do pay taxes. Okay, we have to pay taxes, and we all know that. But what happens in reality is that most of the companies never account for that. They never have the money to pay the taxes, and when tax season comes in, you are running around because you don't have the money to pay. So the second account that you take your money to is the tax account. You define your percentage and you put it out. Third one is the owner's compensation. This is basically the money that belongs to the owner that works in the company. Okay, many people ask me, okay, what's the difference? Well, you can be an owner of the company and you do not work in the company, so you get your money through dividends or whatever type of system that you have to get your returns from your investment. But when you are an owner and you work in the company, you have to make sure that you at least have that money saved, or you have that money separated, so I can get rewarded for my work. And once you separate that money into those 3 different accounts, then the last one becomes the operating expenses. So your company will adjust to work with whatever you have saved in the operating expenses. It's not the same if you go to your bank account and you see those $2 million here of real revenue, and you start operating your company, buying, selling, doing everything. It's not the same that if I do that, or if I go to my operating expenses account and I see only 40% of that real revenue. I am, as an owner, as a manager, will act different, will take different decisions, will be more prudent, will be more creative, will have to work different. So when you take all these situations, separating your money, understanding what you have to operate, and understanding that each one of those dollars need to have a duty, then you start eliminating the situations that will make you have differences between your reports and your bank account. If you don't do this, then you will most likely end up financing your operations with money that's not yours. So that's the second thing that the methodology allows you to improve. Before we continue, I would like to redefine the word profits with you guys here, at least for this couple of minutes that we're going to be together, because profits is not whatever is left over after our accountant tells us that we close the year, or after we pay everybody else. That's not the way profits should be looked at. Profits is the reward of the owners or the investors that took the risk, and this money should not be used to finance the operations. And the reality, what happens is that if we are not an expert, if you're not an expert in looking at financial statements, it won't be easy for you to actually see if your reports, if your profit in reports actually turn into cash or not. And we will end up most likely feeling like this guy here. And I'm sure most of us that have run businesses in one way or the other, in one day or other, we have felt like this guy. I mean, I get the reports and I don't see that money into my bank accounts. And it's very confusing. So something that I would like you to take from us today is that profit is not an event. It should not happen at the end. Profit is a habit. You have to make sure that every dollar that comes in will give you profit, and then you operate. And that's something you will accomplish when you implement something like this method. So how do we do this, and how does it work? How do you do this how do you implement this into a company? The first thing that you need to do is, understand what has been happening with the company. So we take all those very nice reports of financial reports that you get from your CFO, and you turn them, work them, and summarize them in something like this chart that you are seeing here. I'm going to start using some numbers that belong to an example that we have. We'll explain in a minute, but this is where I want to start explaining how you do this. So the first thing on this company is that you determine its gross revenue. For example, $2.1 million in this case, and this company used 48% of that gross revenue for materials and subcontractors. Okay, so then we define what's the real revenue of the company, which is exactly the money that they own. Remember that this is the money they have to work with. So this becomes the new 100%. And once we know this, we notice that this company used 18% of that real revenue for owners' compensation, 7% for taxes, and their money, they used it for operational expenses or OPEX. At this moment, now you know that the real revenue of this company was not enough to support their operations, and they ended up with a cash flow, a negative cash flow, or a negative profit, we could say here. And we'll see what happens, why this happens in a minute. But at this moment, what I wanted to know is, what has the company been doing? What's the money has, what's, and what I have been using the money. So once I understand this, we go to step number 2, which is basically compare your company to financially healthy businesses. This method, or the book, what the book did is it did some statistical study on around 100,000 companies worldwide, and it analyzed them and compared them in terms of the real revenue. Okay, remember that the real revenue is the gross income, or the gross revenue, minus all the materials and subcontractors. It took all the companies and analyzed them on this level, independently on what industry they were. I mean, they were able to come up with this table, which is very useful. And once you understand that what the real revenue of these companies were, they analyzed what they use that money based on these 4 accounts here. For example, companies that run between 500 and 1 million of real revenue a year, they basically use the 15% of that money for profits, 20% for owners' compensation, 15% for taxes, and 50% for operational expenses. At least for me, this is one of the most important tools that the methodology has given me, because it's not, whenever you run a business, it's very difficult to know if you are spending correctly, if you are if you're paying yourself correctly, if the company is giving out the profit that's acceptable. So, and of course, you run around, you look into different, you go to Google, you find out what are the KPIs of similar companies as yours, you run into your competition. I mean, it's fine, we all do that, and that's okay. But this table here is very useful in order for you to understand where you should be. So if we go back to what we have been doing on step 1, we understand where we are. Now we know where we should be, and then we are able to start working on a plan to get from point A to point B. Let me just finish up saying that this table is not a law. I mean, these percentages are a guide. You use them as a guide, and you can modify them. And this is where it comes This is where it comes into account your experience, your advisor experience, your country, your industry. So once you understand all those variables, you can use all this information to define a very good work plan. Coming back to our example, remember that this company was $1.1 million in real revenue, so we would be on this column, and this would be the percentages that we should look for after we implement the plan. So once you do that, then you come back to establish your goals and start taking action. This is a summary of what I just said. This is the situation where the company was, where we understand what are the percentages on what percentages they use the money before. This is the situation where we should be. This is the goals. And this is just a simple calculation that shows you how the company would look if you, with the same real revenue, use these percentages in distribution. For example, instead of using $1 million in OPEX, the methodology suggests that you should be using 723. So me as an owner now know that I have to decrease my OPEX in 291,000. If I go to my taxes account, I know that I should, increase my reserve, I should put more money into this account, $91,000 more. I should decrease a little bit on my owner's compensation, and I should increase the profit distributions on this company. So at this moment, many people would say, well, Gabriel, I think you're crazy, because if you tell me that I have to reduce $300,000 on my operations, I won't be able to do it. And I understand whenever people tells me that. I know it feels like that when the first time you see it. But there are a couple of things that we need to take into account whenever we try to do this. First, you don't do this from one day to the other. Usually you have to start with small goals, small changes in percentages, and you work with them and revise them periodically. Usually every quarter, you change your goals every quarter, and you start, obtaining goals or improving your company that way. The other thing is that I'm not saying that the only thing you have to do is just decrease expenses, because the method Profit First allows you or takes you to look at the business in an integral way, at all of the business at the same time. Because of course, I have to go and take a look at my revenues, I have to look at my sales, I have to increase my sales. At the same time, I have to work with my providers in order for me to lower my material and subcontractor costs. So whenever I can do that, my real revenue will change also, usually, hopefully will increase. And whenever I change these numbers here, my percentages will also change in the bottom. So it's a combination of work between the income and the expenses. And then you start doing this through a method, through a more detailed structure that we're not going into here, but it shows you how to start managing your money better. I think the best way to make this method sink is through a real life example. So let me take you through one of this in order to finish up. A couple of months ago, we get a client that calls us and tells us, hey, Gabriel, I understand you guys can analyze my company and tell me if I'm doing well, how am I doing? So I tell them, yes, exactly, tell me about it. And he told me, okay, I have a medical supply distribution company. I think I'm doing well because I'm selling more every year. I'm actually paying all my expenses. I get my salary and my account, I pay the bank. And my accountant tells me that I'm being profitable, so I'm paying also taxes. So I think everything is cool. It's okay. So I said, okay, let's take a look at it. And the first thing he shows me is the traditional profit and loss statement. And don't worry, I'm not going to go. This is not a class of how to read P&Ls, but I have to signal a couple points to you guys here. So this is a company that used to sell, that sold $2.5 million that year. And it had a cost of products and services of $1.1 million, becoming, and then having a gross income of $1.3 million approximately. With that money, of course, we have to cover all of our expenses that were $1 million in this case, including the owner's salaries, which is $200,000 at that moment. The EBITDA of the company, $375,000. Then we have to take that money and pay all of our other expenses, including loan interest, asset depreciation in terms of accounting, and also the income tax because as I said, this is a company that had to pay taxes because it was profitable in terms of all the accounting reports. So net earnings for the company were $150,000. And this is the moment where your accountant comes to you and tells you, hey, congratulations, you are being profitable and everything is fine. So the owner goes back home and he believes that he gets $200,000 as a salary, which he got, and then somewhere in his company, in his bank accounts or in his books, he had $150,000 more of earnings that year. So he's perfectly fine. He's happy. $350,000 that year. So I said, perfect, excellent. Let me see your cash flow now. So when we go to the cash flow report, which all the companies should have, but in my experience, that's something most of them do not use. So we look at this and let's see what happens, because the situation is a little bit different. Even though we invoiced $2.5 million, they only collected $2.1 million. Most of the companies do have accounts receivable, and that's normal. At the same time, they had to pay $1.1 million to their vendors and providers, but at the end of the day, they only paid close to $1 million. Or the same thing, most of the companies do have accounts payable also. If I don't get the money, I usually delay my payment too. So out of that equation, we come up with $1.1 million in operational cash flow. Out of that money, okay, we have to pay our expenses, and in order to make this simple, we kept the expenses at 1 million, and then the final operational cash for the company was $112,000, very different from the $375,000 that we looked here on the P&L, and that's fine. Out of that, we have to pay the same $150,000 in loan interest. We have to take into account the loan capital payments, which we don't see on the P&L, and also we include the $50,000 as income taxes. So what happens? In reality, the free cash flow of this company was not $150,000. It came up to be $177,000 in negative cash flow. And what happens? This is normal. This is usual. Most of the companies run through this in one time or the other during a year. But the company needs to keep going, so that money has to come from somewhere. And usually comes from one of these three places: from the company savings, from a line of credit that the company might have, and finally, it should come, or it can come from the owner's pocket. So because they have to, plow back money from time to time to purchase something, to pay a vendor, to cover any situation. So when you take that into account, which is this case, the owner, even though he got his salary at $200,000, he ended up using money from other sources through the year, and his total earnings came up to be close to $22,000 instead of $350,000. So this is what happened in reality to this company. And up to now, I have not told you anything new. This is something you guys should know, and we should all know and understand how to run with this type of reports. So let me show you how Profit First takes this information and changes it or summarizes it into a different and easier way, at least from our point of view, to understand it. So when we go to this chart number 3, we come to see that the gross revenue is the same, $2.1 million. The materials and subcontractors is the same, $1 million here. And we define our real revenue the same way as we have our operational cash flow here. But now we understand that out of that money, he used $200,000 for owner compensation, which is here, $75,000 in taxes, which is the sum of 25 here and 50 here. And then the available cash for operations. In this case, he used $1,015,000 for operations. Let's see what's inside of that $1,015,000. $775,000 for operational expenses, same as here. $150,000 for the loan interest payments, and $90,000 for the loan capital payments. At this moment, the owner says, okay, this is the same result. I ended up with a negative cash flow of $177,000 in terms of operations. And okay, nothing changes, but now I understand this better because I know where did I use my money or my cash flow. So he said, hey, I'm interested. Let's start working on this. So once we know what happened with the company, we go back to the table, we define the percentages that we should look or we should try to get to. And once we start working on this, a couple months later, the profit first cash flow of the company looks like this. Okay, give me a second. Looks like this. I'm sorry. One click more. Looks like this. I'm using the same numbers, and for the same company, $2 million of gross revenue, $1 million of materials, real revenue the same as in here, $1 million, $1,112,000. But the owner acts different. Now he knows that he has to take 10% of that real revenue and put it away into his profit account. Then he has to take 10% and put it away for his compensation account. We use the same amount of taxes just for simplicity, and then the owner just understand that now, instead of $1 million here, he needs to work with $815 to run his company correctly. But let's look in more detail into this $815,000. We still have this $150,000 of loan payments and the $90,000 of capital payments, because to the bank, you cannot tell them to pay them whatever you want. You have to agree with them to pay something, so you have to pay that in terms of with the bank. So in detail or in more detail, when we look at this, the changes are basically on the operational expenses. Instead of having $775,000 to work, we only have $575,000. And once the owner understands that, he knows that he's got that money only to operate, he will make the changes, he will operate differently, and once he gets to that point, if he gets to that point, then we'll certainly get the money of his profits and his compensation correctly, and he will take home around $222,000 instead of $22,000. But the situation changes drastically because he now understands what's happening. He's got a top. He knows he needs to adjust his business, and he will start working towards that information and understand his reports every day that he looks at it. So let me finish up with what I think is the most important tool that Profit First gives you. So having showed you the scenario that we just did, the most important thing that I believe is that the method also allows you to change your strategies or make your decisions based on the situation. So let's see what happened with this company once the COVID-19 hit. How did they finish up and handle the situation? As we looked before, we had this situation pre-COVID, which is the one we already looked at. The owner is selling $1,112,000 in real revenue, and he's taking home $222,000. But when COVID hits, the first thing that happens is your sales go down. Okay, so we took a hit from 2 million to 1.2 million. The materials and subcontractors is the same. They go down because we're not selling as much. So we define our new real revenue. The owner will basically follow the method now, and he will keep out of this new real revenue, assigning the money with the same percentages into the accounts. He will take 10% to the profit, 10% as owner's compensation, 15% as taxes, and 65% as operational expenses. Instead of just working on his gut feeling and not knowing exactly what to do, he just follows the method and his company will adjust accordingly. The percentages will not change, your company will change, and also it will focus on the owner on what's the reality of the company. I cannot operate with $723,000. I need to operate with 433, and I will start using Parkinson's law to make my decisions, make the changes, and make sure I can keep moving my company ahead. And just to finish up here, I want to make sure that everybody understands that the owner will also be able to keep getting his profit and keep getting his owner's compensation instead of just giving everything away just to keep the company running, which is basically what happens when this situation goes into effect, or when you get hit with a change in your company like the one we have seen in this past months.
Yeah, I'd like to jump in here, Gabriel. I see this a lot where the owner actually comes in and starts subsidizing an operation that is not optimized, and that's really not okay. And the reason why is, when you start out a business, as Gabriel said from the beginning, most people they're passionate about what they do. They're specialists and technicians. They love what they do. And the second that their business has a problem, the first instinct, kind of like taking care of your own kid, right? The first instinct is to say, well, I will not take profit. I will lower my salary. That's a really bad idea. Because what ends up happening is if you don't get profit and if you don't get a salary, eventually you'll start to resent your business, which is usually something that you are passionate about. I'll give you a prime example. We have a company that started on with this. They make dog food, gourmet dog food, like homemade dog food, and they deliver it to the customers' homes for their dogs. And these people had their business for 4 years. When they came to us, this is pre-COVID, when they came to us, they said, hey, Joey, we've been doing this for 4 years. We've never taken a penny of profit. We're never taking our full salaries. So we ran the system, and within 1 quarter, in 3 months, they took their first profit distribution. Because if you're at 0 profit and I just take you to 1%, which is a mindset thing, right? So if you've got, these guys had like $60,000 a month in expenses. Well, 1% of $60,000, take 1% from OPEX and put it up to profit. 1% of $60,000 is not a lot of money, right? So they were able to take a profit, but more importantly, they were to pay their salaries for the first time. And one of the guys said to me, he goes, Joey, this is amazing. He goes, this is actually like, I've been resenting and hating my business. And I was about to shut down because I'm like, dude, I love dogs, but I don't love them this much, right? And I'm starting to hate what I do. So it's really important for you to understand that you cannot subsidize the business. The business has to adjust, not you. Okay.
All right.
So let's go to the next slide. Once again, it's super important to be careful with the voice in your head, right? I want you to understand something. If you're in fear mode or status quo, we have not seen one single case where we haven't been able to optimize a business. Okay. It's super difficult to do this to yourself. That's why I have a picture of Phil Jackson with Michael Jordan. I don't care if you're the best basketball player in the world, a coach helps you, right? A person who can see you from outside, a person who can guide you, let you know when you're not doing what you're supposed to do, a person who can hold you accountable, which is a really big thing. I'm going to tell you guys something I've learned from coaching people because I do mindset coaching. If you tell someone you're going to do something, and then you give them weekly progress reports, the chance of you actually doing what you say shoots up by 75%. Once again, if you tell someone you're going to do something and you give them weekly status reports, the chance of you actually doing it go up by 75%. So it's really important to have someone, I don't care who it is. It can be a colleague, it can be a partner, it can be a coach, but it's important to have that. And finally, I want to give you a quote by a guy named Astro Teller. That's actually his name. He's the CEO of Google X, which is Google's moonshot division, like the crazy projects that everyone thinks are impossible. And he said, lots of times it's easier to make something 10 times better than it is to make it 10% better. So what does that mean? If I go to your company right now and I say, hey man, I want to increase your sales by 10%. How are you going to do that? What your brain will do is it will start to work within the parameters of the structure that it already has, because a 10% difference is not so big. So I can tweak it here, I can shift it there, and I'll get that 10%. But when you say, I want to make something 10x bigger, your brain says, oh my God, I got to break this structure. I can't work within it because I'll never get there. And that's what we're advocating. Right now is the time, people, to change your structure and your mindset, break it apart, start new. If you do that, you will see significant changes. So Gabriel, I don't know if you want to tell everybody what they're going to receive.
Yeah, just following your comment, Joey. We just want you guys to have information so you can start moving ahead. Everybody who's here through the Executive Forum office, we're gonna get you your first 2 chapters of the Profit First book. It's just we want you to start reading that because it's very helpful for you. You're gonna get a tool to analyze and do all this analysis that I just showed you on your company, step by step. We will tell you how to do it, and at the end, we also we're gonna give you this presentation so you can just review anything that you might want to do in the future. So hopefully this will work for you all and bring you some good results.
Great. So step number 3 is grow your business. What you decide now will determine your destiny. You have a story to tell in a couple of years. And what you decide right now determines the story you will tell. Your decisions determine your destiny. If your story is a story of fear and panic, I'm going to give you a preview of what's coming. Your business will close. You will feel failure, guilt, financial loss, and you may even have to start over and have unrecoverable losses. If you are in the mindset of status quo and you think that this is not going to affect you that much, wake up, because you will only subsist for the next couple of years. You will have constant stress. You will feel remorse. You will feel constantly stuck. You'll have financial problems, and your relationships and your health will deteriorate. However, if you redesign and restructure, if you decide I'm going to grow, I'm going to adopt this mindset, you will have pride, confidence, financial freedom. You will feel fulfilled. And more important, you will be empowered. Empowerment is when you take control back of a situation. Right now, there are tons of people who have given their control and their power to this situation. You take it back because you know that you have a framework that no matter what happens, because COVID is now, it'll be something later, but you have a framework and you know how to handle these situations and you will feel empowered. And that is the best feeling in the world. So, but to do all of that, you have to make one big choice. You have to decide who you're going to be. And you got to decide right now, are you going to be interested or committed? If you're committed, you'll do what we say, even when it's uncomfortable, even when it's hard, even though it's different, even when your mind tells you don't do this, it's not working. If you're committed, you'll do it. If you're interested, you won't. So it's our hope that you will become committed to doing this and changing your profit mindset. So now what we're going to do is we're going to handle questions. I got the questions in the chat, Gabriel. I don't know if you can see them as well.
Yeah.
Okay, so let's just see what we got here. Okay. Yes, there is going to be a recording of this. I'm sure it'll be on the executive forums. I'm a member of executive forums as well, so I forget what the platform that just came out with is, but it'll be on there. I forget the name. On Team Vibe, that's it, Team Vibe. Okay. This says this chart is a different way of showing the Ansoff matrix. I don't know what the Ansoff matrix is, so I'd have to check it out. Maybe it is. I'm not sure what that is. Gabriel, you want to take this one on owner's comp and dividends?
Yeah, basically what it's asking, owner's compensation is related to dividends or remuneration for owner working in the business. Yes, as we said, it's a different situation. If you're an owner that works in the company every day, then the method tells you that you should compensate yourself for that work and separate that from your compensation as a stockholder, let's say it like that. And this is very important because most of the examples or most of the situations we're seeing is either two ways. Either the owner does not compensate itself as it should, or it overcompensates and takes all the money out of the business. So this is a very important thing because it allows you to actually compensate yourself as a owner that works in the business, usually a manager, through using the market rates. You want to use the market rates on that line. So if whatever happens in the future, you're not working in the company, you will be able to bring somebody with your same level or even better, and your company will not suffer because it's already set up to work with that amount of money into that managerial position. That's an example that we usually see when we're working on this with different companies.
Yeah, there's a concept of being an owner or an owner operator, right? Mm-hmm. And so a lot of people are owner operators. And it's important, like Gabriel said, to have that line item of that salary in there separated, because if you ever want to go from owner operator to just owner, you're going to have to pay someone what you paid yourself to run your business properly. So you want to make sure that's in there. That's another reason, again, that you don't subsidize the business, because then if you ever walk away, the whole thing falls apart, right? But it's important for you. And by the way, if there's 3 owners and 2 work in the company and 1 doesn't, then those 2 get salaries, but all 3 get dividends, right? So it's really important for that as well. Okay.
Yeah. There's another question here that's called, is it calculated as an annual average on the revenue, or you go month by month. Basically, what you do is you actually work it as an annual average. You want to look at your company in an annual results way. But what you do is you start looking at it in smaller chunks, usually monthly or quarterly. So you have to keep adjusting your company through the year. You start with a quarterly goal program, or you make your plan on a quarterly basis. You review this every month. There are companies that we start doing it every week, then we go to every 2 weeks, and then we go to every month. It depends on the details that you need to go into. But every quarter you have to review your percentage allocation percentages, and shooting towards that goal that you understand that you should be in X amount of time. Our experience is that it takes you 4 to 6 quarters to get to your goals, depending on the company and on the industry.
So I want to mention something really important about this. I run Profit First, as does Gabrielle, in all the business, but in my business that I have, where I help people organize their personal finances and affairs, I run Profit First. I've been doing it for 3 years. I look at my company's finances once every 2 weeks, okay? I run the percentages. It takes me, if you ask someone, how much time do you think the CEO of the company should be spending on the finance of the company? I've received percentages of 25, 30% of their time. Now I'm a services business, so it's a little different, but I spend approximately a month running my business about an hour and a half on the finances, because I just run it through Profit First. And it's really wonderful. Now, the other thing I want to mention here, which is awesome, and this is human nature. If I have a great month, right, prior to Profit First, I have an amazing month, extra revenue comes in, it's natural that as a person, you're like, whoa, this is amazing. Have a great month. Let's go on a trip. Let's do whatever, right? But with Profit First, since I'm following the system and profit is a habit, more profit comes in, put it away. And then the OPEX account, more money came in because it's a percentage of how much came in that month. Well, if I have extra, I leave it sitting there. Why? So I can bank it. So if I have a lower month down the road, that'll come and cover. So my OPEX is always covering. So the other thing that Profit First does is it kind of protects you from yourself, right? So it's a really, really good way of, in a simple way, where you don't have to spend a ton of time. And by the way, this is also something important that Gabrielle alluded to. When you're working in a bigger company and you've got divisions and people below, even if you understand corporate finance, they probably don't, not at that level. So this is a really easy framework for anybody, because everybody, like Gabrielle said, everybody understands what came in, what do we spend, how much is left. Everybody gets cash flow. So this whole combination just makes it really simple to understand where you are, how we're doing, and to always be profitable, because profit comes first.
Exactly. Joey, I don't see more detailed questions, and I know we're running out of time now, so I don't know if you
Sure.
want to give some other last words.
Sure.
Give back.
I don't know if anybody has any other questions. One other thing that comes up in respect to expenses, where I think we can add a little more value here, is the 3 kinds of expenses that exist in your company. And when you look at it this way, it's super simple and clear. Clarity is power, right? So there's 3 types of expenses. There's things you spend money on that make you money, right? Expenses that generate money. Those are good. We don't want to touch those. Then there's things you spend money on that you could probably renegotiate or talk to your current provider to see if you can get a better deal. And a lot of time in the day-to-day, we don't do that, right? Like, we're just so busy with our day-to-day, we haven't looked at, oh, I can call this provider and negotiate. You can always do that, right? And then finally, there are expenses that have just creeped in over time that if you cut them, nothing will happen to your business, right? And so COVID-19 is actually showing us that there's a ton of those expenses that you thought were necessary, but actually now that you've been forced to cut them, you realize that nothing happened. So those are the 3 kinds of expenses when you're looking at the OPEX. So I just wanted to add that in there. And it's really interesting when you go through and do this the first time, you'll start to see stuff, and you'll see stuff all over the place. And it's a lot easier than you think. We have one final question is, do you do consulting in other countries? And the answer is yes. Profit First works in any country with any business because it's a percentage-based business. So yes, we definitely do. I mean, obviously we focus on Latin America, but we speak English and Spanish. So barring the limitations of language, the answer is yes. Okay, so I think we're at the end. If nobody has any other questions, listen, it's been a pleasure to be here with you guys. Thank you to Executive Forums. Thank you to you guys for your time. And from my perspective, if you need any other information, let us know. And really, right now is the time to decide who you're going to be. This is a mindset thing. Get the right mindset and you will change your life. Gabriel?
The same. Following your lines, Joey. I just want to thank Executive Forum and you guys, all the people who are here with us, to giving us time. We're going to be available if you need us, and you're going to receive a lot of information that hopefully will help. So thank you again, and hope we'll be there for you.